Hello everyone, this is the pre-market report video for today, May 18th in the Indian stock market in terms of Nifty and Bank Nifty. In the last pre-market video, we discussed for some reason there is a weakness in IT stocks as it dropped more in ADR than that of in the Indian market. And exactly the same has happened yesterday. High weightage financials such as Nifty and IT stocks drags the Nifty. I don't find any particular reason. Yesterday's drop was broad-based but concentrated on just index stocks. So thus, I believe it's just profit booking or option trading induced volatility. Since the global cues were not that bad, in fact, Japanese market was super duper bullish. It's just India and China. Maybe one probable reason that triggers the profit booking might be rupee and yuan depreciation. Yesterday, China yuan depreciated to above 7 for the first time since December 2022 and even Indian rupee too depreciated to 3-month low value. Anyway, in the end, Sensex, Nifty and Bank Nifty all closed around negative 0.5%. However, for the second straight day, the overall market is not that bad. The advanced second ratio is more of 1:1, which means again the wider market outperformed the main index. For the 15th day, FIIs were net buyers, but yesterday they net bought for only 150 crore rupees and DIA net sold for around 200 crore rupees. Then after the Indian market has and before the US market opening, US Department of Commerce released the various housing data. All of them came as somewhat good and didn't crash as investors expected. Here, I don't want to bore you guys by telling everything, but I like to highlight this one. Number of new construction starts last April month, it came as it increased over 2% against the contraction of 4.5% in the March. This housing data made all three US major index to open marginally positive. Then in the afternoon, whatever news or data was in favor of the US market. First, in the annual shareholder meeting, Elon Musk promised that he will start deliver the Cybertruck from this year onwards. This made the Tesla to increase over 4%. Then this US Department of Energy made the announcement that they are going to add 3 million barrels of oil additional to the strategic petroleum reserve. This info overtook the fact that US got highest ever crude oil inventories and thus it increased the oil price by over 2.5% and thus all the energy stocks. At the time of this video, WTI crude oil is trading around $72.5 per barrel and Brent crude oil was trading near $77 per barrel. Above all, both the House leader expressed optimism that they will reach the debt ceiling agreement. Even the president cut short their Asia trip by citing the reason that they want to find the solution. All these optimism made the Dow Jones to increase over 400 points. At the end of the day, Dow Jones up by 1.24%, S&P 500 increased 1.19% and whereas Nasdaq rallied 1.28%. Regarding VIX, it dropped by over 6% and again moved below 17. Then there was a rally of regional banks as well since their overall deposit update was really good. In one word, US market was super bullish. However, that enthusiasm was missing in the Indian areas. Only Infosys closed positive of 0.5%, all others dropped marginally. Regarding SH Nifty, it closed near 18,275, which means 50 to 60 points gap up opening. So that's what happened in the global market. Now let's move to the India related info. First, I like to highlight a couple of things about SBI. As most of you know, today SBI is going to release its quarterly results. The expectation is their profit to increase over 68% to near 15,900 crore rupees and their net income to increase by 25% to near 38,850 crore rupees. This is the first info. And the second info is that SBI Mutual Fund approached RBI for the approval that they want to increase their holding to near 9.99% in HDFC Bank. And yesterday, RBI granted the approval. Just for info, at present, SBI Mutual Fund got 5% of HDFC Bank and near 4% of HDFC. So when the merger completes, they might hold approximately 5% so that they want to double. This is very positive news for HDFC Bank. However, for some reason, that doesn't reflect on the ADR. Anyway, another big company that is going to release their quarterly results tomorrow is ITC. Here the expectation is their profit to increase over 14% and 15% revenue increase in FMCG business. In case of hotel, it's 70%. As a summary, for the moment, global momentum turns positive now as US market closed really positive, but however, that same enthusiasm was not present in HSH Nifty nor in Indian ADR. Anyway, at present, it's indicating 50 points gap up opening. Similarly, there are some positive news about HDFC Bank, Infosys and SBI. So let's see whether Nifty reclaims 18,200 or not. Then about the things to look out, State Bank of India, ITC, GAIL, Indigo Airlines, Arvind and Bata India are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, not much that I'm aware of before and during our market hours, but in the night, again various US housing related macro, usual weekly jobs data and Philadelphia manufacturing index were due. Just for info, as per yesterday's macro, Japanese GDP increased by 1.6% against 0.7% expectation. Similarly, European Union's final consumer inflation number for April month came as expected 7%. Coming to technical, day before yesterday, Nifty forms the bearish engulfing pattern. Yesterday, in addition, it forms another red candle with a lower close than that of the second candle. This formation is called 3 outside down pattern formation. Basically, this third candlestick is the confirmation of the bearish trend reversal. In addition, Nifty moved below 10-day exponential moving average for the first time in the last 15 session and closed below its strong support level 18,200. So today, if it haven't gained and sustained above 18,200 in the first 2 hours, then this will lead the Nifty to down below 18,100. Here, there are multiple support parameters in the 18,050 to 18,100 around region, such as 20-day moving average 18,050, 38.2% Fibonacci retracement level 18,113. So, breaking those region will have a huge psychological negative consequences. At present on the daily chart, Nifty moved below 5 and 10-day moving average. So as a summary, Nifty downgraded from strong buy to just buy. In case of technical indicator summary, it's still a strong buy. However, RSI value dropped from above 71 in couple of days ago to 58.5. Then in case of Bank Nifty, it too forms the reasonable bearish candle but with a long lower shadow. As per candlestick analysis, this long lower shadow is the only comforting thing that happened yesterday, since it means buyers were back in the market and clawed back some of their lost ground, but the clawback is not strong enough. So, in order to revive the positivity in the market, Bank Nifty has to move above 44,000. About moving average and technical indicator summary, it's same as last 2 odd weeks and still a strong buy signal. Then from options engine open interest for Nifty, significant put options were unwound between 18,250 to 18,400 and comparatively more number of call options were added between 18,200 to 18,300. Finally, some new put options were added between 70,900 to 18,050. Thus, 18,000 to 18,050 is the support to look out today. Then, based on overall options open interest data, 18,400 got the maximum call option followed by 18,300. Thus, 18,300 is the immediate resistance and 18,400 is the strong resistance. Then, in case of Bank Nifty, based on overall options open interest data, 44,000 got the nearby maximum call option open interest. So, 44,000 is the immediate resistance. Similarly, 43,500 got the maximum put options with significant call option open interest. So, 43,500 is the immediate support and 43,000 is the strong support for today's expiry. So, that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.